Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock, with news the EU has caved into local pressure as in increasing its subsidies to farmers again. First up, however, we should note that Wall Street is closed today for a public holiday. Elsewhere, China released its July data on its foreign exchange reserves overnight, and it showed that it is burning through its huge stockpile at its fastest pace yet, as it seeks to prop up its currency and stem a rising tide of money flowing out of the country. But even with this record outflow of $145 billion, it still has the world's largest foreign reserves, about $5.5 trillion at the end of July. However, if China starts selling its large holdings of US Treasury paper, that will have the effect of putting up pressure on American interest rates. And we've just heard that the country's top economic planner, the NDRC, has just given approval for another $20 billion worth of highway and bridge projects, the latest of its emergency stimulus moves, and presumably paid for by their reserves. In Europe, subsidies for farmers are back, especially for dairy farmers. The irony is farmers say they are drowning in milk, but don't think cutting back on production is an option. They just want taxpayers to pay them what the market won't. The EU has no credibility in trade liberalisation. In New York, markets are closed and the US Treasury 10-year yield benchmark remains at 2.13%. Yesterday we saw local swap rates move marginally higher, but within their recent ranges. The US benchmark oil price is dipping again today, now at $44 a barrel, and the Brent benchmark is at $48 a barrel. The gold price is also down now to $1,118 an ounce. New Zealand dollar starts today lower against nearly every pair at 62.6 US cents, 90.3 Aussie cents and 56 Euro cents. The TWR is now at 67.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.